This regulatory reporting example will demonstrate how a modern business can leverage proactive alerts, standard regulatory reports, and dynamic dashboards to enable employees to quickly generate compliance reports and make informed decisions to improve company safety. It is now time for Wayne, our safety officer, to complete his OSHA forms. The use of an alert simplifies Wayne's ability to ensure all incidents from the previous year have been closed prior to generating his forms. In the past, generating the OSHA forms was a very tedious task for Wayne, as much of his time was spent gathering and compiling the data required by these forms. The use of the standard OSHA and Bureau of Labor Statistics Enterprise One forms greatly accelerate this process for Wayne. In addition to taking advantage of the standard regulatory forms, Wayne also takes advantage of the available analytical tools to help control his organization's incident rate. Wayne begins the process by ensuring that there are no open incidents from the prior year. With the use of an alert, Wayne can quickly see that all of the incidents from the prior year have been closed. He can now run his regulatory forms. Thanks to the standard OSHA 300, 300A, 301, and as well as the Bureau of Labor Statistics survey, Wayne can now accomplish in seconds what used to take him weeks and months. These standard forms include all of the required regulatory data, such as the name and address of the establishment, the number of employees and hours worked by those employees, as well as the number of cases, number of days affected by those cases, and injury and illness types involved in those cases. Leveraging these standard regulatory forms provides Wayne with more time to analyze his company's data rather than gathering it. To analyze the data, Wayne takes advantage of the many analytical reports that are available within the system. Some of the metrics important to Wayne include the locations with high incident rates, when their incidents frequently occur, by day or by month. Wayne can easily see that their incidents increase as the weekend approaches, and it also spikes during the month of August. He also notices that the plant is the location with the most incidents. One great feature with these reports is that they are interactive. So Wayne has the ability to dissect the data on the fly by simply clicking a grid column. As he filters his data to the incidents that occurred on the plant, Wayne can quickly see that the majority of the incidents at the plant occur on a Thursday. Wayne thinks it may be time to have a conversation with his plant manager to see if they are doing any specific activities on Thursday that may be causing incidents. Another key metric Wayne analyzes is the lost time by project. He easily notices that they have one project in particular that has a much higher lost time rate compared to the others. Not only is the lost time rate higher, but the majority of that lost time is days away from work. It is time for a meeting with the project managers to find out why they are having so many incidents that are resulting in employees missing work. These are just an example of the many metrics available to Wayne to help him drive down his company's incident rate. Now let's recap the regulatory reporting scenario we just saw. An alert simplifies Wayne's ability to see if any incidents from the prior year remain open. With all incidents from the prior year closed, the standard OSHA and Bureau of Labor Statistics reports accelerate Wayne's ability to generate these forms. Because these forms are now very easy to generate, Wayne has more time available to analyze the dashboard metrics and make necessary business process changes to help control his organization's incident rate. This is just one example of how a modern business can leverage proactive alerts, standard regulatory reports, and dynamic dashboards to enable employees to quickly generate compliance reports and make informed decisions to improve company safety.